Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Dogecoin and its token Doge. None of the content is financial advice. We'll be covering machine learning based price forecast, regression analysis, accumulation strategy, and estimated bull target for Doge. So if you enjoy the content, please do subscribe to the channel. Also give this video a like. Today we'll start with, this is the homepage of our website, cryptoweeklies.com. The link is on the bottom of your screen. Has machine learning based forecast and regression and accumulation strategies for most of the top cryptos by market cap. Again, these are top 20 and there are this top 100, and then there are ETH pairs and ETH pairs and BTC pairs, as well as some of the other lower market cap crypto based analysis, as well as some of the machine learning based analytical indicators. So now we'll start with Doge and Doge USD based price analysis. We'll lean to this Fibonacci based chart, Fibonacci levels based chart. Right now the price of Doge is coming close to this 30-cent level. Over the last 24 hours, Doge has rallied by about 18%. Over the last 7 days, it's the second most rallying crypto of the top 100 cryptos by market cap. Around 84% rally over the last 7 days. And the wider crypto market has also gained a lot over the last 7 to 8 days. You can see the fear and greed index levels at around 74, market cap trying to touch $2.7 trillion. Bitcoin is trending at around 82,000, more than 82,000 USD valuation per BTC. Market cap of Doge is coming in at around $42 billion. By market cap, it's ranked number 6th crypto rank per market cap. You can see over here. Doge has climbed several spots over the last 7 or 8 days to be the 6th most valued crypto. If you exclude stablecoin, it's the 5th most valued crypto. Tether is a stablecoin. And now focusing our attention on this Fibonacci Fibonacci level based valuation. From the last bull run peak of around 72 cents, if you draw to the end of the end of the bear market, the valuation at around 4 cents. The Fibonacci levels are drawn per that level. Right now the prices are really close to this 0.38 Fibonacci level, corresponding USD valuation at around 31 cents. So if that level of resistance is broken, the secondary level to watch is this 0.5 Fib level somewhere at around 39 cents, and the next level to watch is at around 47 cents. So the 39 cents and 47 cents become the crucial levels. And if in the potential bull run of 2025, if Doge makes a new all-time high, that is the previous all-time high of around 73 cents gets taken out, then the three scenarios for Doge you can see. Per the last time Doge did take out its all-time high from the previous lows. The key levels to watch were this in this first move, where this 3.618 level of Fibonacci level, that at that level back in 2018's bear market, from the 2018's bear market, was at around 6.5 cent. Corresponding 3.618 Fib level corresponds to a USD valuation of around $2.53. So that is at $2.50 Doge would be considered as overvalued as Doge was during the in the parabolic move from the bear market of 2020 till about early 2021. So that's one scenario if Doge manages to go that high. If we account for some diminishing returns from one market cycle to the other, the 1.618 level Fibonacci corresponds to a USD valuation of around $1.16. That's one scenario. Then the moderate scenario at around $1.84, and again the higher end at around $2.53. So that's the Fibonacci based analysis. Now we lean on the machine learning models that we have trained. This is the machine learning based price forecast for Doge. Right now has had a significant rally till about 30 cents. The three scenarios are: the first is the trend based model, which is the pink line, which helps us provide the directionality if the prices have upward directionality or downward directionality, that is are they trending up with time. The pink line says yes, between 34 cents and 47 cents, barring any bullish or bearish scenario. That's the trend nature of the price forecast. The bull case for Doge is between 39 cents all the way to about $1.20 between now and middle to end of April 2025. So about 6 months into the future, our model looks at what could happen using historical price action at a weekly price action level since 2017. This data is fed to the machine learning model trained on ARIMA, LSTM, and XGBoost techniques, and the purpose is to identify if the market were to exhibit a bullish bias, what are theoretical forecast, and what if they exhibit bearish bias, what are the theoretical forecast in that case. The price movements are determined by the market forces. No model can try to accomplish a fortune teller kind of scenario, what will happen in the market tomorrow, but definitely helps understand some of the expected bull cases and bear cases. This is the one standard deviation bull case. Equivalent bear case is between 17 cents and about 29 cents. That drop would constitute between a move between 68 percentile confidence. If on the other hand Doge exhibits that euphoria scenario that it exhibited during the end of the halving year of 2020, now the halving year ending 2024, if that kind of euphoria scenario is exhibited by Doge, then the 2 standard deviation or a euphoria related 95 percentile ceiling for price for Doge is between 45 cents and about $2.90. That's where we get the Fibonacci level based 3.618 level fib level, somewhere between now and April of 2025. Again, these are ranges, and for each week the ceiling is of a different magnitude. That means week by week the theoretical 2 standard deviation moves have a upward bias, and you can see week by week valuation in a tabular format. This is the base case, the trend based pink line in the middle. To its left are the 3 bear scenario at 1, 2 and 3 standard deviation confidence, and its right are the 3 standard deviation bull scenarios. And the way to interpret is this table is, for example, on 17th of November, the base case price for Doge is 34 cents. Right now, the USD valuation of Doge, if you see over here, is 29 cents. So the likely case for Doge with 68% confidence is that the prices stay between 29 cents and 39 cents. So that's the 68% or 1 standard deviation bear and bull case. That's where 68% confidence the machine learning model has estimated that prices will stay within that range. At 95% confidence, the prices either would be between 26 cents and 45 cents. And at 99.7% confidence, the prices will be between 22 cents and 51 cents. So that's how to interpret those models. And as we draw our attention further into the future, unless Doge exhibits a euphoria phase, the likely columns to pay attention are just the base case in this middle and the 1 standard deviation bull case to its right. So that's where how you can interpret the model. Again, we have similar forecast chart for most of the top 100 cryptos by market cap. Now we'll focus on the regression based analysis for Doge. Right now the prices have rallied a lot. You can see over the last month or so, the prices have exhibited a significant move from once a low of about 10 cents back in early August of 2024 till towards the range high of this 1 standard deviation yellow line to about 33 cents. So in the larger scheme of things, Doge has rallied from its undervalued position till its 1 standard deviation ceiling. You can see historically speaking, Doge spends about 70% of the time within these 1 standard deviation bands. In the bull market, that is, again, if we stay bullish, the bands are taken out to the upside. That is, the price move towards the upper end of the breaks out from the upper end of this band. In the bear market, the price breaks to down from the lower end of this band. Right now, if the market sentiment stays bullish, the 2 standard deviation ceiling for Doge is coming in at around 78 cents, kind of very close to the previous all-time high for Doge. Whereas the 1 standard deviation ceiling might offer some resistance at around 33 cents. So it would be key to see what are the theoretical ceilings going forward. This chart gets updated every single day. The fair value for Doge at around 14 cents right now, and if there is a major correction in the market, the 6 cent Doge would be considered 1 standard deviation floor, which Doge has not seen. The last time this level was taken out was all the way back in January 2021. So throughout the course of this market cycle, Doge and its price has stayed meaningfully above this 1 standard deviation bottom. Most of the cryptos have not had such good fortune which Doge has had. Again, it's the flagship meme. It's the original meme in the market. Again, that could be one of the reasons. And last but not the least, we will be considering 3 scenarios. One is for accumulation of Doge. Again, the SMA based model, which color codes the price of Doge in terms of how it's doing against its 20-week simple moving average, and presents a risk level and reward level. And the key idea with this is whenever the price is in a frothy territory, let's say above 40% risk, that's when halting DCA or DCAing out of the market helps you avoid dollar cost averaging at some of the higher risk levels. Again, from here, again, above, let's say the threshold above, you are trying to avoid all of the moves in this regimen where the risk levels are amplified. You're trying to avoid those kind of moves. The key idea with that approach is that DCing over here when the risk levels are between 0 and 0.1 helps us identify. This model helps us identify what are the risk level at any point in time. Again, and per this model, what can be done in the future to estimate what is a theoretical moderate to high risk target, or moderate target to lofty goal for Doge in the next 20 weeks. Per this model is between 48 cents and 60 cents. That's the point between 0.6 and 0.8 risk. That could be one of the scenarios if the bull market were to continue. On the other hand, the lofty target would be somewhere between 60 cents and 71 cents with the data that we have as of today. That's the regression based analysis. Right now the risk levels are between 0.3 and 0.4 for Doge. And the DCA model also, instead of looking at only the 20-week moving average, it takes into consideration the polynomial function that we saw on those weekly candles, and based on the proportional and time adjusted distance between the price and the fair value, these color codes are analyzed and normalized between 0 and 1. And the key idea again with this is again avoiding DCA at some of the higher risk levels, or DCAing out of the market. Let's say when the risk levels go above let's say 30%, helps us avoid the parabolic moves and like DCAing during the parabolic moves. Right now the risk is at around 12%. That means potentially 88% reward. The peak ceiling at 2 standard deviation is at around 57 cents. So that's a key value to look at. This is a more conservative model, helps us identify some of the high risk zones for Doge. Whenever the price goes higher than 37 cents, that's when the risk levels get amplified to this red territory. Between 37 cents and let's say about 53 cents, between 37 and 53 cents, that's the moderately high risk target for Doge, and the lofty target is between 56 cents and about 69 cents. That would correspond to a euphoria scenario for Doge at this point in time. And last but not the least is analyzing how the price of Doge is doing versus this time weighted average price. This time weighted average price helps us identify some of the undervaluation territory for Doge, helps identify some of the over a longer period of time what is the most decent buy zone. Per this analysis, right now the risk to accumulate Doge is at around 28%. You can see over here has been amplified by quite a bit. That is the TWAP risk has been at around 28%. And again, the summary of all of these 3 targets for Doge is this estimated bull scenario for Doge. This is, takes into consideration the 3 accumulation model that we saw, the DCA model, which and the time weighted average price model, and SMA model. The weighted risk is coming in at around 31%. The bull run target for Doge per this expected value based risk reward ratio is at around 75 cents for Doge at this point, and the reward is at around 3x from the current price. So that's another way to conservatively estimate, to tune out some of the noise on one model at a time, and come up with an estimated target, which is a composite of all the 3 risks and also the reward. This helps us identify some of the areas where price of Doge gets more and more overvalued. Right now we are at around 30 cents, so about a 3x reward from here. That's where Doge becomes more and more overvalued. So with this, I would like to conclude the video. I hope you enjoyed the content. If you did, please subscribe and stay connected. Hope to see you again tomorrow. Thank you and have a nice day. Bye bye.